Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is September 26th, quickly closing out another month, heading into October. I will be having a couple videos. One, my monthly video of dividends paid out for the month of September will come up here either Friday or Saturday, as well as what stocks I will be looking to buy here in the month of October. So look out for those videos. Today we are going to cover Sysco. This is a distributor of food products. Let's jump right in the video. So if you want to know more about this company, check them out at www.sysco.com. That's www.sysco.com. That is their homepage where I pulled this information from. And they are a food distributor out of the consumer staple sector. I believe it's consumer staple, or it may be consumer discretionary. If you know for sure, drop a comment down below and let me know which one it is. But they have several lines of their business. Broadline, the largest segment of our business, our broadline OpCosts distribute a full line of food products and a wide variety of non-food products to both independent and chain restaurant customers and other away-from-home locations such as healthcare and educational facilities. Locally focused, our broadline OpCos are able to provide the hands-on customer service that sets us apart, and that's really what they provide. A lot of food products to restaurants, schools, hospitals, as you saw, elderly care facilities, educational facilities. That is really their customer base. So if you've been out to a restaurant, you may have even eaten some of the food that they deliver and not even realize it. I do see their trucks on the road all the time where I'm at here in Michigan. I'm sure they are around the country. Sigma is our U.S. customized distribution operation serving quick service chain restaurant customer locations. Specialty companies. As one Sysco, we ensure every customer everywhere has constant access to our vast selection of specialty foods and supplies. We meet the needs of customers looking for specialized and differentiated products through 5 groups of specialty companies: Fresh Point Specialty Produce, Buckhead and Newport Meat and Seafood, European Imports, Guest Supply, Supplies on the Fly, Greco and Sons Italian Specialty, and Asian Foods. So that gives you an idea of what they have their hands in. And international. That's right, they are an international company. Sysco is the world's global food service leader. Our robust international network supports customers in 90 different countries around the world. Our international operating companies outside the U.S. and Canada are located in the Bahamas, Ireland, Costa Rica, Mexico, United Kingdom, France, Sweden, Luxembourg, Panama, and Belgium. Sysco International Food Group, IFG, is the export specialty division of Sysco with over 30 U.S.-based restaurant chains that rely on IFG to deliver their brand and unique customer experience to consumers in over 90 countries. IFG also exports Sysco branded products to numerous distributors around the world. So again, they are a supplier and distributor of food products, food supplies for cooking, that sort of thing. That is their bread and butter. You may have seen their trucks around, and chances are, if you go out to restaurants, you probably have eaten some of their food and may not even realize it. Now, the reason we are taking a look at them, down 3.72% on the day. We are talking about Sysco Corporation, ticker SYY. I believe they are out of the consumer staples sector. Closed the day out at $66.23. 52-week range as low as $66.21, as high as $87.41. So they are right up against knocking on the door of their 52-week low here, may be even about to set a new 52-week low. So this one definitely is worth taking a look at and watching here. If it drops below this 52-week range, who knows where it will stop, but that would be a great time to watch it and see where it bottoms out. And if you're interested in a company like that, that's the time you want to be picking these up. Average volume 2.3 billion. Today's with 3.07. You can clearly see that sell-off from start to finish, right? Just a nice slope down. If you were on a slide, that would just be a nice slide down to the bottom. Market cap of 33.441 billion, a beta of 1.11, so they are more volatile than the overall market. PE ratio sitting at $19.09 per share. EPS, very nice EPS on this one, $3.47 per share. Earnings date, the next one is coming up sometime between October 30th and November 3rd, so be on the lookout for that. That'll be next month or the beginning of November here. Forward dividend is $2 paid out on the year. They are a quarterly payer. We will see that payout by a quarter here in a little bit. And a very nice dividend yield on this one, 2.91%. Ex-dividend date, October 5th. So their ex-dividend date is coming up. If you were interested in this company, you would need to buy them on October 4th or before that to be in line for this next dividend. And it looks like they're going to pay out that dividend on October 27th. 1 year target estimate, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated with Yahoo Finance, just one of the sources that I like to go to for information. They have a 1 year target of $85.08, so they see some upside in the stock price on this one. Now, I like to go into statistics, look at dividend yield theory, see if it is potentially undervalued. To do that, we go into statistics, we go down to dividends and splits, we look at the 5 year average dividend yield, 2.41%. We compare it to the current 2.91%, or over here, forward annual dividend yield, same thing, 2.91%. And if it is higher, which it is, that speaks to some undervaluation. If this number was lower, which it's not, that would speak to some overvaluation. So at least according to dividend yield theory, this one is potentially undervalued with a bit of a margin of safety here. And here you look at very nice payout ratio. I like 75% or below. They have a 56.77% estimate on this one, so it meets the criteria for their payout ratio. We'll see if they are growing that payout here in a minute. Now, I like to look at financials as well. You're going to see a lot of good information in financials, their balance sheet, their income statement. Are they paying down debt? What's their revenue growth look like? Is it growing? Are they buying back shares? All that information in there is very debt to equity ratios. You can find that all in there. And if you are interested in a company, you need to do more of a deep dive in these. These videos are more on a high level to see if I'm even interested in a company. That's how I use these. And if I am interested, it meets the criteria for me to do more of a deep dive. Then I really get into the financials of the company and even do a discounted cash flow analysis to see what price I'm willing to pay. But for this video, we are going to look at financials. To look at free cash flow, we want growing free cash flow over time because we want growing dividends over time. And that is where dividends are paid out of, free cash flow. They can do some things with free cash flow, pay out dividends. This company does. They can buy back shares, they can make acquisitions, and they can pay down debt. So we go back to 2020 here, $898 million. 2021, $1.4 billion. So nice jump up there in 2021. Little drop down here in 2022 to 1.1 billion from 1.4, and another jump up here where we're at currently in 2023 so far, 2 billion. They are not done with the year yet. Looks like it's going to be a banner year for them overall from 2020 to date. Definitely seeing free cash flow growth here, and a bonus here, they are buying back shares, right? 844 million here. None in 2021, 2022, another 500 million, another 500 million this year so far. So again, if you go to 2021 and 2022, it does look like their free cash flow dropped, but a lot of that drop can be accounted for the repurchase of their own shares, right? They used some of this free cash flow to buy back their own shares. They're using even more of it here in 2023 to buy back more shares. So that is good as an investor. If you are in this one, you are becoming more of a shareholder. Even if you don't buy more shares, whenever they buy more shares, it increases your percent of the ownership. Now, I always recommend more than one source. So another one that I like is stockanalysis.com. You pick out any sources you want. Just make sure you're looking at 2 or more to make sure the information you are getting is accurate. They have 10 stock analysts that have taken a look at this. They call it a consensus buy. And again, according to dividend yield theory, this one is potentially undervalued. And they have a low estimate of $80, which would be a 20.79% increase in the stock price from where it currently sits. They have an average estimate of $86.60, which would be a 30.76% increase from where it sits. Excuse me. And that is pretty close to what we saw with Yahoo Finance on the previous page. And they have a high estimate of $90, which would be a 35.89% increase in the stock price from the $66.23 where it currently sits. And this one, similar to what we saw yesterday with Coca-Cola, all of these are below where its current cost basis is. So I do like it whenever I see forecasts and they are all higher, and this is 20% higher, significantly higher from where the price currently sits. Now, that doesn't necessarily mean that the forecasters are right. It's just one of the things I think is a good thing to look at whenever they're giving forecasts which are significantly higher than where it sits. It does lend me to believe that there may be some undervaluation, and as we saw, dividend yield theory does say it's a little undervalued. Now, I like to look at return on equity and return on invested capital. So to do that, we get into statistics here. We go over here. I clip this out. Return on equity. Now, I like 10% or better. This is smoking high, one of the highest I've ever seen, 115.40%. That is really screaming. Return on invested capital is above the 10% I like as well at 14.60%. And I also like to look at the estimates for EPS growth, earnings per share growth, 5-year average or 5-year forecast is 15.20%. Very, very high earnings per share growth. If it was to hit that, that would be very, very good. Revenue growth is at 3.88% estimate there. So good numbers overall with this one. Again, this one might be really worth throwing on the watch list at a minimum, if not in investment territory right now. Let's keep going here. Look at the dividend. And as we said earlier, payout ratio under the 75% that I look for, 57.64%. Now this is the only drawback here really that I see. Dividend growth is not as high as I would like it at 3.13%, but it is growing, and that is typically faster than inflation. Usually inflation is around 2%. Obviously it's elevated a little bit right now, but at 3.13%, they are growing their dividend, and they have nearly a 3% dividend yield currently. Now, looking at their dividend, we go back to October 2020, 45 cents. Looks like they raised it up in July 2021 to 47 cents. And again, in June 30th, 2022, up to 49 cents. And July 6, 2023 of this year, up to 50 cents. So somewhere in June and July, it looks like they raised their dividends, and I would expect that to continue into the future, especially with the payout ratio under 60% here. Very, very nice numbers overall on this one. Very interesting company. Might be worth, like I said, at a minimum throwing on your watch list to see if this one busts through that 52-week low and sets a new 52-week low. Might be a time to take a look at this one. This is the vested interest stock screener. This is how I set up the videos, as well as how, again, I look at a video on a high level to see if I'm interested in investing in it. If it is, then I do more of a deep dive. It must meet 5 of the 8, unless it's a financial company. Then it must meet 6 of 9. I throw in price to book for financial companies like a bank. Well, that is it for this one. Let me know what you think of Sysco Systems. This one is very, very interesting. Looks like it is presenting some value right now. Is it in your portfolio? Is it one that you are looking to add? Let me know down in the comments down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, stocks we might be avoiding, tips and tricks that we've learned along the way as investors. Again, we can't benefit from each other's investing, but we can certainly benefit from each other's knowledge base and experiences, things we've learned along the way, good and bad. Good and bad. You can always learn from things people did good or some of the mistakes other people's made so that you don't make them as well. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock you'd like me to cover in the Stock Pick of the Day series in a future video, go ahead and drop it down below, and I'll work it into the rotation. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risks. You can't lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek advice counsel from a certified financial advisor.